Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com.
You're listening to Real Estate Radio Washington, D.C. Metro with local expert Ryan Sloper. Now, here's Ryan.
Welcome back, Washington, D.C. Metro, to Ryan Sloper's Real Estate Radio. And I'm joined today by my guest, Louis Cammarosano, the general manager of HomeGain. Coming up in about 15 minutes, we're going to discuss why you should sell your home today rather than waiting later. It could cost you thousands of dollars. Coming up about 2:45, we're going to jump into whether short sales and has their time arrived. Is short sales becoming more of the norm now? And what does that mean to you if you're trying to make the decision on how you should proceed with disposing of your property that you can no longer make payments on? This segment was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. So go to HomeGain.com today to see what I'm talking about. All you have to do is type in your home address, and you will get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free. So check that out today at HomeGain.com. So before we went to break, we were discussing, why it makes sense to buy a home now where you can have your mortgage payment cheaper than what you would pay in rent. How you can actually lock in a low fixed rate, historically low fixed rates, and protect yourself from future inflation, which is bound to happen, and it could be in the near term or the long term. And, I really think that the point that I want to make here is to stop paying so much attention to the national media and what they're out there saying, the doom and gloom that everybody's portraying. Every markets are local. We discuss this all the time. And if you guys have been tuning in over the last year, you know that things that are going on in the rest of the country aren't necessarily taking place here in the Washington, D.C. metro area. Louis, you can't be more correct with what you just said about, really, it's really have to pay attention to the numbers right now. That's what really matters.
It's your cost of ownership, not the cost of the home, I think is what you've been saying.
Absolutely. It's always the cost of home ownership. And I think, there was an article that
by the way, versus cost of other shelter forms like renting.
Exactly. And I think an article that you had sent me last week, I believe it was through Associated Press, which said financial turmoil intensifies homebuyers' anxiety. And the article basically led on all the things that are going on, the turbulent stock market, the downgrade of the U.S. debt, spreading European debt crisis, and a U.S. economy that seems just to be, very stale, is leading people to really second guess or question their next move as far as it pertains to real estate and whether they should buy or not buy. And it actually went through like three different people, like professionals. The first one was Eric Unin, a marketing professional in an accounting firm who was about to buy a home in July in Michigan. Then along came August. What really scared me is that I'm a single guy and I don't want to have a mortgage by myself. The economy is taking a pounding and my friends who are getting laid off are leaving the state. Prices are still falling. So I'd rather have money in the bank than money in a house. Now, my problem with that, I don't know where he's getting his advice from. Once again, he doesn't have to dump all of his money into that property. That's number one. You want to find, most of the time there's FHA programs which would allow you to get in with a minimum down payment of 3.5%. That would be number one. Number two is, what are the rents in your area? Obviously, he hasn't given me that information. But if he loses his job, he's not only will he not be able to necessarily make his mortgage payments, he wouldn't be able to make his rent payments either. So I don't really like the argument of I might lose my job, because anybody can lose their job at any given time. So, and if he had money in the bank, well, if he only put 3.5% down, he'd still have money in the bank. So I think that kind of goes out the window as well. So it really is important to really look and see, what is the market bearing as far as rentals? What would be your actual mortgage payment and your down payment requirement if you were to buy a home right now? Because the argument as to where your property value is going to go down the road, I think really does not make sense right now, because people are getting very caught up in, well, I think that, we're going to continue to have declines for the next year or two and property values are going to slide down. My counter argument to you is, what are you going to do if interest rates go back up to 5 or 6 or 7 or 8% and property values continue to slide? I mean, Louis, what would you do?
Well, again, everything is is particular to your circumstance and into the market area. But one thing that I pay attention to is the inflation rate, which right now is running at 3.6%. So it sounds like you can get a loan at lower than the inflation rate, and that the inflation rate should go higher, but that your loan rate will stay the same.
Yes.
So that would protect you against drops in the price of the home, because you'll be paying 2, 3, 4, 5 years from now at a, the money that you pay back will be in dollars that are worth less than when you first took them out. So in a sense, you're getting a discount every time the inflation rate goes up. The other thing you have to consider is, what are rents now, but where do you anticipate rents going? In many areas, it's pretty obvious to see that rents will go up because there's a lack of rental housing. Now, if you take out a mortgage and you lock in a 15-year mortgage, you kind of know what your mortgage payments are going to be. But if you are renting, chances are, unless you're in rent control, your lease is going to come up in a year or two, and it's probably going to get an increase tacked onto it.
Like the story I just talked about. I mean, from 1500 to 1950.
Right. So then you have to figure out, does it make sense, even if your home price may drop in value, will your cost of home ownership or your cost of living, meaning your cost of shelter, remain lower than your cost of renting?
Yeah.
And that's how I would analyze it. Now, there is a lot of there's also going on right now, people are trying to, and you see it all the time, and people talking to you about getting a loan, is they're expecting interest rates to stay low or go lower, especially now after Bernanke said that he's going to keep them low until January 2013, which makes people want to sit on the fence. Now, what people don't understand is that the Fed doesn't have that much power to keep the rates that low.
No, and
for that long.
Exactly, and they actually
that's what they want.
That's what they want, but that doesn't necessarily mean that's what's going to, the market's going to follow their line of thinking. And they actually mentioned that they weren't going to do any more asset buying programs as of right now. And not to mention, if you guys have been listening over the last month or so, the people get really confused. The Fed fund rate and what that affects. It's not going to necessarily affect actual mortgage rates, because the mortgage-backed security market is what dictates mortgage rates. The Fed funds rate is going to affect auto loans, home equity lines of credit, credit cards, those things that are of the short-term nature. I can't tell you how many phone calls I've fielded over the last couple of weeks where people have been like, well, yeah, but did you hear that Bernanke said he's going to keep interest rates low until 2013? And I said, yes. And I said, what rate was he referring to? That's the federal fund rate, which is a short-term rate for they're basically lending money to the banks, and what's going to be passed through to you, the consumer. So you guys really have to be in tune with what's going on with the actual mortgage-backed security market. And a lot of the time, they are not going in the same direction. We have an anomaly going on right now where it's really hard to even track what's going to happen from one day to the next, to be honest. And a lot of the technical indicators that are out there that would typically say, okay, well, the 10-year Treasury is doing this today, so mortgage rates should be doing this. A lot of those things go out the window.
Well, the 10-year Treasury is an anomaly right now because, what is it, 2.6%?
Yeah.
Well, that's lower. Why would anybody put money away for 10 years when the minute you buy it, it's worth less than you put in, because the inflation rate is higher than the current interest payments that you get on the 10-year.
Yeah, and then we have so much uncertainty. Really, that's the only thing that really explains that, Lewis. Is that people are just looking for any rate of return. And
but that's ridiculous, because a lot of the uncertainty is due towards the United States not being able to meet its obligations in 10 years.
I know.
And why would you buy the 10-year and only get 2.6% in return for your risk?
I agree 100%. But the
markets will figure that out eventually and demand a higher rate.
Exactly. And that brings me to my next point, because there's been a lot of talk about, the whole gold rally and that kind of gold kind of coming back down off of its highs. Well, really, to me, I mean, like I said, I'm not a financial advisor by any means, but really what happens is, I think when you start to see gold rise, I mean, that's just basically market telling you that they're doubling down on the risk of that there's going to be the second recession and or depression.
Well, not just that, it's a reaction to an increase in the money supply.
Yep.
When you have that increase in the money supply, then gold reacts in the manner that it's acting, and then people say it's a bubble. But one way you can tell that it's not a bubble, the gold or silver markets, are when you have a bubble, they use the shoe shine boy or the cab drivers giving you stock tips. Right now, I can probably rattle off a few gold mining and silver mining stocks, and no one would even know them or even hold them.
Exactly.
And during the internet boom, everybody knew what Webvan was, eBay, CD Now, Amazon, and so on. And everyone was buying them. They were overvalued, and there was a lot of money chasing. But right now, it's very hard to find in your 401k plan at your employers or any major investors that have any kind of exposure to gold or silver.
And you know what? I also is a very good measure for me, Lewis. Is America is really not a big holder in actual gold, and with the economy struggling, there's more people running to these pawn shops to sell their gold than to keep it.
Absolutely, that was another point, right? People are selling it. That's where the mania is to sell it.
Exactly.
Because they see the price go up.
Yeah, and that kind of to me tells you, I mean, for the novice investors that are out there, when they see this pullback, it's like, oh, there's a bubble there. Really, I mean, these big institutions that have tons of money to play with, they just play with the market up and down and take the people that get scared anyway.
Right,
So,
but a bubble is when you have too many people overpaying for the same asset, and right now there's very few buyers in gold and silver, and a lot of it's overseas. I think 50% of the demand on the investment side is in China and India.
yeah, absolutely.
So the United States is not gripped by a gold or silver bubble. In fact, it's the opposite.
Yeah, and it's interesting because I mean we've talked about it. If you guys have been listening, I definitely think with the future inflation that will inevitably hit in the United States, gold it was a smart play, and it looks to be that's going to be the continuing trend over the next couple years. And so you take that, and then if you do plan on investing gold and silver, that's fine, and actually locking in yourself and buying a home at 4% or less on a 30-year fixed is your second smart play. I mean, it's a great play. Number one, you have to have a place to live anyway. If you're going to stay there for 5+ years or more, the other example in that Associated Press article was a financial planner in Chicago who had been counseling a young couple on whether to buy or continue to rent. In August, made the counselor's decision easier. He told them to rent, and he said, "Well, what if you lose 20% of your equity and you can't sell your house? It's just too big of a risk." I disagree with him because he's not taking all things into consideration. What happens if the interest rates go from basically 4% to 6%, and the cost of rents shoot up in Chicago, which I'm imagining they probably are right now? In the D.C. metro area, we have rents rising astronomically at a very rapid pace. So in order to lock in your cost of homeownership, not just have a cheap cost of homeownership, but to lock it in for, down the road, you need to take advantage of that now. You can't wait 12 to 24 months to make that decision because there's just too much uncertainty as to what's going on. So if you're out there right now and you're contemplating what your next step is and how you can make a sound decision for you and your family on the best time to buy, highly advise you calling in at 877-245-2030. That's 877-245-2030. And I take it a step further to say we've talked about in the past couple weeks, if you've been listening, that it's even if you don't plan on buying tomorrow, that's perfectly fine. If you plan on buying the next 6 months, a year, you need to start the process now. Because I can tell you, and Lewis, I'm sure you'll probably agree with me, that the people that start the process a month before they buy, they're probably going to come to the realization that they may not even qualify for what they thought they were going to qualify for. And, I can't tell you how many clients I've talked to on a regular basis that they think that they qualify for a $500,000 home because the last time they bought a home was 7 to 8 years ago, when a lot of the lending requirements were a lot different. I will tell you one of the biggest hangups that I've had lately is people that are in a home now that's upside down, and they're trying to go and buy their bigger and better home. They have the income to support it. However, they can't count the rental income if they would rent their current residence out and go buy the other one because they haven't had it rented for at least a year. And I know a lot of you out there are in that similar situation, and the only way really around that is to actually move out of your property and rent that for a full year and rent a place for a year to get that on your tax returns to be able to not have to count the payment against you.
And another thing I became aware of is that if you are going to do that, you need to refinance before you rent it out.
Yes, that's true.
Because they make you make a representation that it's your primary residence.
And you plan on living there for at least 1 year.
In some instances I think you need to take occupancy for 60 days, but then after that, you may plan on that, but if your plans change, most of the documentation allows you to notify them and tell them that your plans have changed.
Yeah, and most of the things do say that you plan on living there for a year, but, obviously circumstances can change. But, if you're going to just flip it real quick and try to rent it out the next month, that's not a very smart move.
No.
Coming up after the break, we're going to discuss with you why you should sell your home today rather than waiting 12 to 24 months down the road. You're listening to Real Estate Radio.